Okay, everyone, thank you for joining today's session, the peer-to-peer. Again, really appreciate for those of you who have made their time to join today's session, especially because today unfortunately falls under a national holiday, but because also that we want to appreciate the time that Mas Arya has given us. So we're gonna record the session so that those who are missing the opportunity can still catch up to the topic or the materials. But yeah, at least we have a couple of angels here that is spending their afternoon to listen to uh, the peer-to-peer session. But also in this opportunity, I would like to share that this peer-to-peer session will be our last online activity for the Angel Studio program, and that moving forward, we will have more activities, especially connecting the angels with entrepreneurs. So we will really focus on the simulation phase, but also the investment phase. So after this session, I will also share with you the summary of all the online session that we had, the discussion, so that we hopefully can basically standardize what the program has given to its participants. And maybe we can go to the next slide. So for today's discussion, we're gonna have a special topic, especially on the topic of how to make money from equity, because previously in our last sessions, our previous sessions, we have learned the different funding investment mechanism. So we have equity funding, we have capital loan, we have sweat equity, and also convertible notes. And while we have covered a lot of topics, especially on the capital loan. And then we also had a topic on sweat equity when we had the activity in Sanayan. We never really dive on the equity. And actually, most of investment scheme, especially with startups or businesses, comes in the form of equity. So really, for us to dig deeper on how to actually leverage, but also how to quote unquote make money from equity. And we will have a panel not a panel, sorry. We will have a speaker today. I will introduce him later on, but also to give a recap of what the peer-to-peer sessions is hope to be able to share with you is basically we hope to tackle the lack of investment skill, especially on aspiring new angel investors, and to staying updated with industry trends. And now I already have Mas Arya here with us, so I think I can also share a bit about his profile. So today we have me, Mas Arya Setiadharma from Prasetia Ventures. I will read his profile a bit. So Mas Arya is the CEO of Prasetia Ventures. Under his leadership, Prasetia has built a diverse portfolio of over 100 startups across Southeast Asia, especially with a focus on technology-driven innovation. Mas Arya is known for his hands-on approach in supporting founders, offering not just funding but also mentorship and strategic guidance. So that's the profile I'll share about him, but also maybe I would like to start with basically bringing Mas Arya to the screen and for Mas Arya to give a bit about of your profile. So Mas Arya, feel free to share. I think we can pin Mas Arya as well. Okay.
Yeah, hi everyone. Yeah, what Raka just mentioned is mostly my profile for the on the venture investment side, but on the I do also investment in other stuff as well. One of my company also went public in 2022 after being private for about 12 years. So I think the the road to IPO is something that I always look at, and looking at companies is also about long term, not really just making money in 1 or 2 years. And that has been my thesis, even though I invest in startup, but looking long term is always my method.
Okay, thank you, Mas Arya. So maybe before we go with the conversation, also can you tell us a little bit also about what your company is, Prasetia Dharma or Prasetia Ventures, and basically also your role in the organization, because I know for a fact that it's also a group, so yeah, you can also share on that for context to the audience.
Sure, sure. So Prasetia Dharma, I founded the company with my brother in 2008. It's it started as a construction company for the telecommunication industry, and over the years, my brother and I, we always like technology because we kind of grew up in the US from 98 till 2008. So that experience exposed us to a lot of tech companies early on when Apple was not cool yet, when Apple was just a computer company, what Amazon did from being a not profitable until profitable all those years. So we were kind of exposed to the tech companies in the US. So it started 2012, 13. I started doing angel investment in companies in Indonesia. One of the first one, not one of the first, but the first one was actually a food delivery company in 2012, and there was no GoFood or all those Grab Food and anything else because back then we were competing with one of the rocket internet companies in Indonesia. So it was quite early, and we exited that company in 2015, right before GoFood was launched. Actually, Gojek back then approached us and offer us a collaboration when they were thinking about doing food delivery. They thought of collaborating with us. So my company back then was clickit.com. And I'm not saying it's a mistake, but I think the decision that we took as a company is that we don't want to collaborate with Gojek. Um, and I guess that taught us a lesson, right? And I think it's something that we always looked back and we thought of it as, should we or should we not have collaborated with Gojek? Because even though if let's say we collaborate with Gojek, we might end up getting kicked out of the ecosystem anyway, right? So there are a lot of if and what could have happened anyway. So yeah, so that was the early on why we started investing in tech companies because I was exposed to that exit in clickit.com, and beginning 2015 we started doing more investment in tech companies such as Journal, which ended up with Makari, and we also invested in Contact, which also end up in Makari. Some other things are checkup.com is a tech company, one of the leading ones now. We started as a school line back then, and yeah, so in Indonesia we've invested more than 70 startups over the years.
Okay. Thank you, Mas Arya. I think it's also interesting that you shared the what do you call it that the looking back experience from the early on. But I think also I heard that outside of your role at Prasetya, you also do angel investing, and because this program, Angel Studio, also to share with you, it's a program by the UKID Tech Hub, where the objective is basically to create and develop more angel investors in Indonesia. So the people participating here are mostly those who are interested to invest but don't know how to start. And yeah, because within that context, with your experience also in doing angel investing, maybe you can also share how did you start and how long have you been doing it and what made you want to invest as an angel. Maybe this also aligns with how you then create your company, but you can also share on especially when the context was angel investing.
So I think um, I mean, like I said, right? I start doing angel investment in 2012, so that was 13 years ago, and it's really about my curiosity, right, about the industry, and not being able to start the company myself. So it started off as just thinking about ideas that could be started these days. I mean, like these days would be AI, right? I think everything is about AI, and and just thinking about what can AI do and everything else that exposed me to a lot of questions and answers as well. I mean, I would search on it, and sometimes from searching about it, you find companies that are being born these days and getting a lot of attention in the US, but not being able to do it myself. That was the reason, and also I guess trying to find companies that I can invest in, because the thesis is there. I want to be exposed in this industry. I want to expose to this internet economy, but not being able to do it myself. That was the reason back then. I think over the years, the reason to invest is because, yeah, you can just get excited about an industry, and these days I would say the platform to be involved in investing is more is better these days than 15 years ago. So I would say talking to a lot of angel investors, talking to a lot of early stage VCs, accelerators, angel network groups. There are many network groups in the region, in Indonesia, including itself, and also Singapore has a lot of good ones as well. So just being involved in those angel network groups, getting the deals that came through, looking at those deals, and not really rushing into it. But of course, when you see there's a lot of demand in one of the deals, then I would take a look more. I would read more about it than just deals that don't have a lot of demand. Of course, good names such as XAI or if you know Cursor in the US, if those deals came into the network, then I would take a look at it, right? Because I know of those companies already. So just being aware, I would say being aware of the ecosystem, learn more about what companies out there, and knowing that knowing what you want. I think that's also important, because investing in startups is very risky. I don't recommend this to any I don't recommend this to every person that I meet. I would say I would recommend this to people that know the risk, because it's a very high risk, high reward investment.
Okay, thank you, Mas Arya. I think you put also a point that we have discussed in our previous conversation, especially with angel investment. There's also this sense of subjectivity because you mentioned about curiosity of a certain industry. Because as an angel investor, you tend to invest especially in things that one either you know or either you're passionate about. So I think because you also say that, I think it's a good way. You cannot do it on your own, but you have a thesis you want to be exposed in that ecosystem so that you support as an angel investor. So I think that's a one perspective that resonates with what we have discussed in our previous conversation, especially for the angels. But also being involved in the network, getting exposed to the deals is also the first steps to really start the journey as an angel investor. You cannot make investment if you don't know the deals, especially the demands. But also not to also FOMO or be a follower where the investment or the deals with high demand, but you also need to look at it closer, as you mentioned, but also important is knowing what you want. And there's a caveat. You said that you don't recommend investing, especially to everyone. You recommend it to people who know the risk. So being in the ecosystem is, I think, clearly at this discussion is important. But because you also mentioned from 2012 until now 2025, so it's almost 13 years. Maybe you've seen also changes in the investment landscape. 2012, if we remember, it was the time where startups can start with the just crazy ideas, but the condition today, at least within the ecosystem, we see it's a different thing. Maybe you can also share like how has the startup investment landscape, especially in Indonesia, evolved, especially the past 2 3 years, maybe after the winter tech as well. And if we also see that the VCs now, even they don't always invest in startup anymore, they invest also in uh, in products business, in foods business. So maybe you can also share like currently what sector or industry do you, uh, I would say, recommend for people to look around.
So, I, I mean, a lot of industries are still prime, right? I mean, logistic, healthcare, education, all those industries are something that they are still lacking in Indonesia. I mean, if we're talking about Indonesia, right? We're talking about investing in companies in Indonesia. That's something that I would always say, right? Find industries that are still not. If you look at those industries, if and those industries have not changed for the past 20 years, or even there are changes, but very minimal, then those industries are something that they are primed to be disrupted. And the disruption can come into a lot through a lot of mode, right? But business model disruption, or technology disruption, and I would say just those industries that are not being, just look at I mean, we have one actor here, right, Arifin, right, and so I'm gonna talk a little bit about film industry, and how AI is really disrupting the ecosystem. Just look at Google VO3. If any of you know Google VO3 and how that software can generate a film scene, right, just from a text, that really disrupt the film industry, especially on the, let's say, the CGI creators. All those CGI creators who had a lot of projects might not have a lot of projects going forward because of AI or because of Google VO3. And just looking at that example, if you look at other industry, and those industry have been making a lot of profit for the past 20 to 30 years, that might change soon. So I think, uh, yeah. So for the context of Indonesia, I would say logistic, healthcare, education would be my top three. But of course, financial technology, financial inclusion, those are something that are still being disrupted as we speak. But I think I want to take a note on uh, the how the industry has changed the past 15 years, right? Back then, who wanted to be a founder? 2012, right? I think to start a company, the access to capital was really hard. Even when I started my uh, the company that became listed now is a power plant, hydro power plant. It's a renewable energy industry. 2012, 11, 12, there was no conventional bank wanted to give a loan to us back then. The first bank that gave a loan was Bank Syariah, uh, Bank BRI Syariah. So it kind of gave a sense that back then access to capital was really tough, and that's when all the venture capital started coming in. But the back then, I would say taking a risk of quitting your job and becoming a founder was still not cool back then, right? So of course that led to the supply of founders being very very small, the supply pool of founders. But these days that's not a problem, you know, because the access to capital is there. So the demand for those entrepreneurs who want to become a founder is I would say limitless, because now a lot of people want to become a founder. They want to start a company. So when let's say there's a deal coming to your lap, any of you investors here, always think that for every idea that comes to your lap, there is always at least five other companies trying to do the same. And the idea is cheap and the idea can be copied, but I think finding the right talent, the right founder to execute that, that's something that I always put emphasis on, you know, because the deck can be saying about the product, the market, the strategy and everything is and that can be copied. But I think being the founder himself or herself is not something that can be copied, and I think we should focus on finding the right founder to execute the idea. And you've heard about e-fishery. You know, this scam is not just in Indonesia. I just shared on my Instagram one of the scam that happened in India. It's called Build Their AI, where they built, it's a $1.5 billion valuation invested by Microsoft, invested by SoftBank, invested by Qatar Investment Authority, and then ended up as a scam. It's an AI that is I mean, it's quote, because it's actually a bunch of developers running the AI in India. So it's a total scam, right? And who could have known? And being invested by Microsoft, but by being by those who you would think would do the due diligence, right? So and that's already a late stage. If a late stage can be a big scam like that, how would an early stage play out? You know, there's always potential of scam. So scam is everywhere, and it's really it's not cool, but I mean I think it's the reality, right? I mean it's an easy access to capital, looking good on camera, looking good on your deck, and then you get funding, and then you don't know where the money goes.
Okay. Thank you. I think it's interesting because you've been in the industry for that long. You can also see that change, that uh, entrepreneurial entrepreneurial spirit are growing in Indonesia. I think I remember, especially 2020, 2021, 2022, almost everyone wants to be a founder. So, but then now I think it starts to dwindling down also a bit, because I think there was also a lot of programs of incubators of these founder programs, so that everyone is just popping up ideas everywhere. And as you said, back then access to capital is a challenge. Now the capital has a lot more, but I think what we also have the thesis with Angel Studio is that currently the early stage businesses, they are also in a scale that is far beyond what the venture capital mostly are looking for. And that is why we also believe that within the program, angel investing can be also a bridge to bridge that gap, so that if we have more angel capital, angel investor, we will have more capital to be accessed by the founders. But you mentioned as well that even in the late stage, scam can happen. So apalagi in the early stage. So it also, again, I always love when it resonates with the previous sessions. you mentioned that finding the right talent to really run the idea is very, very important. So again, invest in founders. Once again, in this session, it is what do you call it? Yeah, re-strengthen. So maybe
Can
we
I
can
add?
go.
Can
Yeah,
I
yeah,
add a note?
sure.
Can I add a note on why the founder is really important, right? Let's say we find two founders that we know for sure it's not going to do a scam, right? So let's just be positive about the ecosystem. Let's say you have 3 or 5 founders who you think can execute the ideas. I think why the founders matter is because it's really an execution play, and it's very rare that the product that a company that I invested 2 years ago still have the same product or same strategy now. So in 2 years, product can change, strategy can change, the team can change, and I think a founder who can find the right talent within the organization, who can hire the best team as well, can survive because he alone cannot build a company, right? He alone can build a product, but he alone cannot build a company, cannot grow a company with a very strong organization structure, and he alone cannot execute the the growth very rapidly. So that's why the right founder who can evolve the product, improve the strategy, and hire the right talent is also important.
Thank you. Thank you, Mas Arya. Maybe if we can, I can also ask another question, because especially this session, the topic is especially on the equity, and you mentioned the industry that you, in a way, said to always look for is also logistic, healthcare, and education. And at least to my experience, most of these companies usually they provide investment opportunities in the terms of equity, but also because you mentioned almost every 2 years or 3 years, startups or the way they run business can change, because equity is more of a long-term commitment types of investment. So maybe if you can explain in simple terms how what you will define as equity, and from that, what are the ways to monetize it, at least from your experience?
Okay, so I think when you say equity, is just a form of the asset class, right? And but going towards to becoming an equity in a company, there's always the road to there, right? And the road to there, what I meant is that when you invest, it doesn't have to become an equity right away. You know, if you, I don't know if you already thought about thought of, I mean, like taught in the class about comfortable note, about safe. Those instruments are also safe, meaning it doesn't have to become equity right away. Why it's the pros and cons are there, of course. The cons is that you're not an equity shareholder, you cannot vote anything. But on the pro side, if the startup went bankrupt, you don't have to follow the liquidation processes, all those winding down the companies, because technically you're not a shareholder. You hold the safe instrument, simple agreement for future equity, or you hold the comfortable note instrument. And when the company dies, it doesn't matter, right? It's technically you're zero anyway. But the upside is that you don't have to be dragged into the liquidation process. The also pros is that when the company is doing well, then you can convert to equity. So, well, when you say equity in startup, it doesn't have to start off as an equity per se, as an instrument. You don't have to become a shareholder right away from the get-go when you invest your money, but it can technically as a instrument where it's safer for your side, for you as well.
Okay, thank
Does that
you.
answer the question?
Uh, I will dig deeper on that, but
Okay.
also to give context to the angels. Actually, we have discussed about SAFE before in Jolshin session. So SAFE is an instrument of a promised equity at a future date, while convertible note is an instrument where later you can decide whether you want to change the notes back to basically capital or to an equity. And then when we say equity, I think also usually when talking about equity, the other forms of getting income is basically through the profit sharing model or the dividend model. Maybe you can also share how does that looks like in practice, and maybe that can help you to explain more from what you have explained previously on equity.
Yeah. So when you invest in tech companies or tech enabled companies and companies that are planning to go into the venture funding route, I would say it's not gonna be a dividend play. So this is a very different ball game, different track. I would say if it's on the venture funding track, then it's a different outcome. I think the best possible outcome for companies that end up in this venture funding track is that as an angel investor, you might be able to sell your share in 3 4 years, 2 3 years, maybe even. If the company is doing well, there's a there's a primary round coming, and then the incoming investors wants to clean up the cap table a little bit. They offer a secondary, then you can exit, maybe at a very good return. In because what let's say you're waiting for a dividend, right? And you come from a capital market, and let's say your dividend is 6% or 7%. That's your dividend, and it takes a while, right, to even get your money back. But if you're in the venture funding route, in 3 years, some of the, the investment that I've done, we can end up at 5x. That's a 500% of your investment. So it's a totally different route, totally different risk reward than a dividend play. So yeah, when you're talking about these companies, they don't do that. But if you, let's say, you buy a stock in the stock market, then dividend yield is like 5 6 7%. You might happy about it because yeah, it's safer, but of course it's different route.
Yeah, Arya.
Yeah.
Hi, how are you? Hope you're
Hi, how
well.
are you?
First of all, congratulations on the premiere of your movie yesterday. Yes,
Yeah, I
Mr.
was gonna
Pre-
talk about it as well. I'm rather new in this film industry, right? But I think it's also interesting.
yes, I think we'll get to that in a second. But I think what Raka was trying to get at is so I think you're wearing two hats today, or basically in general, you're wearing two hats, right? So one, you as a personal angel investor, and also you as the CEO of Prasetya, gitu kan. I
Mm.
think, correct me if I'm wrong, with Prasetya, it's more the venture play as a capital gains, something along those lines. But as an angel, that's where I'm interested to know. Do you also play capital gains, or do you diversify into dividends and also profit sharing and this and that, and basically you have risk averse and also very risky investments as well as an angel?
Okay, so definitely I diversified a little bit as well.
Mm-hmm.
When I also invest in paddle court. These days paddle is on the rise, right? So it makes sense for me to.
Ngajak-ngajak dong kalau pedal.
Yeah. I will.
Okay, the rest.
So definitely paddle court is an interesting asset class, right? You don't hold the land, you hold the right to operate the land for a number of years, and then you will get the revenue from those land, right? So as an investor, you pay a commission for the operator, but then you get yield from the revenue. So it's not a dividend because you technically you don't own it, the
Mhm.
land and everything, but you it's a yield towards what you invested. So it's quite interesting as well, and that's something that I do on the side on a personal note as well.
Yeah, because I think you're definitely a very seasoned investor. Obviously, um, as you said, sometimes you have some very risky plays, as in, especially when you do venture investments. Capital gain, as you said, sometimes you can make 5x, 6x, 7x, but sometimes you can also lose everything.
Yeah.
It's also a possibility. But especially here at the angel, a lot of these angel investors are first-time angel investors. So obviously, most of them are more risk averse, and some of them are actually also quite happy just doing loans and something that is a bit more steady. So that's why we basically just wanted to know if you also have something that is more, let's say, conservative. So maybe it's not extremely high paying, but it's also a safe investment if you do something along those lines as well.
Uh, if let's say investing in F&B brand can be considered safer, then that's something that I would as well. You know, it's not like a tech company, you know, with a tech multiple, but investing in brands is something that I did in the past as well. I'm
Mhm.
looking at one right now, but it's not something that is very scalable, if you say. You
Yeah,
know, so it's not really high risk, high return. Uh, yeah, so I mean, like definitely, I would invest in more safer, but for me, there's always an angle. So I'm not gonna say it out loud what my angle is, right? But for my every investment, it's not just one random guy coming to me with oh, I want to do a restaurant, and I would invest in him, you know. So there's always an
yeah,
angle, and it's 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 a strategy I'm building, right? I'm building an
yeah,
ecosystem with all of my investment,
yeah,
and uh, my angle is because I have a lot of portfolio companies, and when
yeah,
I can add something to the ecosystem that would help the ecosystem.
yeah. And jumping from, let's say, lower risk investments to high risk investments. So as far as I understand it, you also invest in movies.
Mm.
And from my understanding, being in the industry, it's a very high risk industry. So why were you interested to invest in movies, basically?
Okay, so I actually just talked about this yesterday at the press conference for the tie-in usai di sini, and I kind of look at it as a why I came into to the tech ecosystem. Right back then, it was all about internet economy, and I was not able to do it myself. So this time around is also similar because it's a creative economy, and creative economy is something that I thought of for the longest time, and I think it's a very interesting economy because the sky is the limit. Once you finish make one product, right? Let's say you create a song, right? And basically your cost of building that song is just one time, and then it's all about marketing. It's all about getting it out there. If you're successful, the sky is the limit. You know, not technically, but I mean, it's really it's different than let's say you build uh, let's say a bottle of milk, right? A brand for milk. Your cost of goods sold is always there. You cannot just sell one more bottle of the milk without producing it again with a factory. Meanwhile, a creative economy where which it's a movie or a book or a song, it's something that you just make it once, and then literally next time comes along, you just sell it through the online, through the distribution of cinemas. So it's something that is very, very interesting. But for me, it's really about the timing. The timing for the internet economy. Maybe the right timing would be 2017, 2018 to come in as an investor. For me right now, for the film industry, it's really about finding the right timing. I think my brother and I think that right now is the right moment, is the tipping point where a good movie would easily break 2 million views, like 2 million on the cinema moviegoers. So that's something that we think of these days, whether a movie can make profit, and how likely it is. Is it the right timing, the right market these days? So yeah, that's kind of the thing. We just think that investing in movies these days is the right timing.
Mas Arya, if I may ask or clarify, you mentioned like the investing in movies, also the one with paddle. Is you do that in a capacity as your venture or as an angel?
As
If
an angel, as an
as
angel.
an angel.
Yeah, but to be honest, right now, because we've had some early on success in the movies, we we are planning to do it more properly as well.
Okay. Okay. Yeah, I think it's interesting because usually when I talk to people who do angel investing, these types of unique investment they do, especially in an personal capacity or in angel capacity. And as you mentioned, you have the same reason when you were exploring tech back then, and this time is that you see the opportunity or the potential of the industry, but you cannot do yourself. But you also have some other, as you mentioned, it's a strategy, especially for you. You're building an ecosystem so that personal perspective or subjective perspectives is always also very important in the angel, especially in the angel investing that you do.
Yeah,
Okay. Yeah.
I think something that might relate to the others here, right? Because in the movie industry, I'm rather new. I mean, I started in 2023. Yeah, mid 2023. That's when we start doing direct investment. Although before, since 2017, 18, I've been involved through one of the funds, Idea Source. But uh, being involved directly since 2023 is something is it's a new experience for my brother and I, and that experience is probably similar to some of the angel investor here, because you feel rather new. You don't know anyone. You don't know who the good ones, who don't you don't know who the bad ones, right? And that's something that I'm doing right now, being in direct in the industry, trying to get to know people, meeting people in the industry, hearing feedbacks about who is the good production house, who is the bad production house, their track record. You don't want to be the new guy on the block, and all this I would say vultures, right? I mean, maybe there are vultures out there where we're just trying to get your money, and not really with a good intention.
Okay. Maybe my last question from me before we go to question and answer, because the last point you mentioned also, when investing, there should also be an involvement from your side as an investor. But maybe if you can also share how involved should especially an investor or an angel investor be, so that they can still have a control to the portfolio, but also not too directive to the founders.
Okay, so it's um I would not say that what I do is what a typical angel investor should do, because when you're too involved, it's quite tiring, right? Because you have a small stake, and then but then they come to you for help, and you just cannot refuse because you're part of the company, right? And I think setting the not barrier, but I would say the limit, right? I mean, this being able to say that, okay, I'm gonna be involved only this with the founder is really important. Setting the expectation, So it's, if let's say you only own 1% or 2% of the company, and they ask you for a lot of meetings, then I would not take it, right? I mean, because there's always time. My time is money as well. So I think setting the expectation with the founder on how often you would want to be involved, or what things you can be involved in, and it's really important to, especially in Indonesia, where they might look at you as a source of network. They might look at you as a source of door openers, So yeah, I think setting the expectation early on is very important with the founders.
Okay, thank you. So there's no like rules to how involved, so it goes back to the agreement, but also maybe your personal motivation on being involved.
I
And I
mean, if
think
if let's say I want to be really involved, even though I only own like 1% or 2% of the
percent
company, but it's something that is I'm passionate about, and I want to
passion.
be involved, then yeah, then maybe I should set the expectation higher as
Yeah,
well, right?
true. Yeah.
Yeah.
But yeah, and you also mentioned that as an angel investor, you don't only just support with the capital, but i- all your assets, yeah, network or opener is also something you can contribute in.
Yeah.
Okay, maybe we will open the session for question and answer. Maybe if anyone from the group would like to ask to Mas Arya directly. Okay, yes, I saw Jason raise your hand. You can ask.
Thank you, Raka. And thanks, Masaria, for making the time. I'd like to ask a question about equity dilution. Now, I understand it might not be a black and white, say, good or bad thing. It might be the standard course of how things work at the beginning of equity financing rounds. But do you have any opinion, or based on your experience, any experience on whether it's a good or bad thing to be diluted? And do you have a limit on how much you want to be diluted? Thank you.
Hey, so I see that my video is frozen. Can you hear me though?
We can
All
hear
good.
you, but yeah, okay.
Okay, so I don't know why my video is frozen. So sorry. Jason, is this from the perspective of you as an angel, or what?
Yeah, as an angel.
So let's say, so what you're talking about, like, let's say you're an angel in the company, and then there's a new investor trying to come in. Is that correct?
Yep.
Oh wow, this is tough, right? Because it really depends on who the investors are. I mean, if let's say it's a big corporation, and they say, okay, we'll invest 5 million over the next 2 years over several rounds, but we want to get a 30% ownership of the company, then that's different than, let's say, someone, okay, I want to come in, I have a lot of network, I want to put only 200,000 or 100,000, and we want to have 3% of your company. That's two totally different, uh, you know, scenarios, right? So I would say it really depends, and I can't say wasn't the normal, but I mean, typically for a VC, let's say, when every round, 15 to 20% would be the normal dilution for every funding round. 15-20% would be the normal ones. but always it's not always like that. If let's say your company is really really hot and really out there, leading the pack, then maybe even a dilution of 10% is good enough for everyone. So it really depends. I can't say it's a rule of thumb, but on average, I would say 15-20 would be the normal dilution.
Okay, I see. Thank you, Mas.
Welcome.
Okay, thank you. Yeah, I think it's uh, an interesting topic. Equity dilution comes after when you start really having equity. But thank you, Jason, for asking that. It also shows like what to expect, yeah, especially when doing investment. Maybe one more questions from the audience. If not, maybe I will. Arifan, are you still here? Maybe you can also share. Oh, uh, final question or final remarks as well? I think. Okay. So I think there are no more questions. And from my side, I think I've also already asked a lot of questions. Maybe Mas Arya, from you, one last like closing remark, but also maybe messages that you can share, especially to the people in this room. So because we have been doing this online session for a couple of weeks now, so the learning phase, we would say like really, we're gonna close it with this one, but really is to start taking the step in doing investing. So really, yeah, your words on encouraging the angels to start safely but
Mm,
also
mm.
effectively. Yeah.
Okay, so I would say, I mean, whenever you invest, you want to diversify your investment, right? And diversifying, it could be from the different asset class. Maybe still, if you're quite risk adverse, then maybe a lot of your money would be on your certificate of deposits, or deposito. Maybe some of your investment are in crypto. Allocate some. Maybe some of your investment is in your own business. Uh, then maybe you allocate some for other investment as an angel investment. But for that angel investment pools, I would say diversify as well. Diversify by industry, diversify by maybe stages as well. Maybe put some in the more later stage through an angel network. Some of the direct investment will be on the early stage, but in that pool itself, it should be diversified as well. Don't put your egg in one basket. So I would say invest at least from the get-go. Start thinking that I would invest in 20 or 30 startups, because a number of them will die, and you don't want to miss out on the good ones. So I would say from the get-go, prepare yourself. The mindset is that I want to diversify. So if you have let's say $1 million and that you want to invest in the tech ecosystem, I would probably divide that into 20. So a ticket size of 50K each for each investment. So as an angel, you have the luxury of being patient as well. So you don't have to invest every year. I mean, if there's a good deal coming to your lap, you can invest. If there's no good deal, you don't have to invest that particular year. And I think that's a different um, pressure than what a VC needs to do, because a VC has a investment period and they need to invest. They have to invest before the investment period is over. So as an angel, you have the luxury of being patient, and I would say take your time, do your research, talk to people, talk to other people, co-investors or VCs. If you have a particular deal, don't rush just because it sounds as a good deal. I mean, and don't be greedy. Definitely don't be greedy, because You don't take the, let's say, oh, we're offering 200,000 for 20% of the company. Don't take the whole round. Take maybe like 30K, 50K, and then ask people to join the round. Then you will get feedback about the company as well, and what other people think about it.
Okay, thank you, Mas Arya. So to also just wrap up your closing remarks, I think Mas Arya, I can really see you're the type to really diversify within your diversify, you diversify. And because yeah, most of the participants here, at least at the beginning, you've shared that you've done a couple of investment on different models and tried to exploring now angel investment. So it's part of a diversification from your whole investment thesis. But if maybe I would like to reconnect to what Mas Christian Sutardi said in last week's session. His tips was if you want to be an angel investor, you need to also set target for yourself. So you don't just wait until the good deals come to you. You need to target as well how many investment you want to do in a year, so that then you have a target how many pitch you have to see in a year, how many pitch you have to see within a month, how many streets you have to have in a week, so that you as an angel investor also kind of do it actively but also strategically. So you do your investment with a whole what do you call it, yeah, realization in your mind. And lastly, Masari also said to always do your research, but also don't be greedy, so take your time really to explore this path. So I think with that, we can wrap up the session. Mas Arya, thank you very much for your time, especially in this national holiday. And for the groups, just to wrap up, so again, this is the last online class that we're gonna have for Angel Studio. We're gonna have a few activities still in June and July, where we focus more especially on connecting the angels in person with the founders. We will have an investor networking, if I'm not mistaken, in the second week of June. And then on July, we're gonna have one of the big event. We're gonna share later as well the information through the emails. But with that, I think we can wrap up the session. Thank you very much for everyone who has participated in today, giving their time uh, uh, to share within this to share their time, their holiday time to listen to this session. And yeah, with that, without further ado, I'm gonna end end the session here. Thank you very much for everyone. Then I think we can stop the recording here, and we can also close the poll and this. Okay, have a good long weekend, everyone, for those who have leave, and see you in the next session.
Thank you, Raka. Thank you, Arifin,
Thank
for
you,
inviting me.
Mas Arya.
Thank you, everyone who listens to this. Thank you. Bye bye.
Bye.